Okay, guys. Whoever has a question, please jump on in. Ask away. So you guys can see the trading view. I just wanted to maybe even just look at the market as a whole. And
yeah, it looked like we had like a lower top just recently this last week.
Yeah, I mean, there's basically it's pretty, to me it's pretty straightforward. Like what's happening is that we've just been doing lower highs and lower lows more or less since the October high, right? I mean, it's like 125 was clearly a very good, well-defined top, and we just keep, like lower high, lower high, lower high, lower high, and it's just very clearly defined. That's why I'm trying to avoid all of this blind bullishness I'm seeing everywhere. And City, you and I have spoken about this at length, just by trying to be a little more informed about the market. It's just like we have to be realistic here. So it's like, okay, fine, we had a nice little, really attractive bottom, right? And we like very briefly fell below 60,000, but then now we're in this upwards channel here. But now we're about to break below it, right? We're literally 4 hours away from breaking below it if we close below 78. And then
I was looking at your waveform bands indicator, and Bitcoin recently looked like it was rejecting off of the 200-day moving average. Looks like it's headed back down to the 50 moving average. So interesting to see that on your indicator.
Yes, exactly. And then the other problem, to make it even more concerning, is if you look at altcoins and you look at Solana, it's just the exact same story. It's like, okay, we had this nice little high where we finally got to 250. Everyone got excited, and then we got rejected, and then we got rejected again, and then we got rejected, and then we finally had this little breakout about the beginning of the month, and then we're now heading right back down to 82, 83. And if that doesn't hold, that to me is probably the most critical level to watch over the next week or two, because this is if we can successfully retest this level and then continue higher, then that could potentially be a fundamental trend shift. But if we get rejected here, then we're right back to exactly where we were, like right back to 75. And that's not very good for alts. So that's where we're at. And then when I look at the altcoin market scorecard, I mean, it's just reinforcing that point. It's making it very clear, like where we are and what we're doing. So if I look at one day is very bearish. 1 week is neutral. 1 month is neutral. And that's it. I mean, that's what she wrote. So to me, it's just, that's why I don't get carried away with these small little breakouts until they get retested. The retest is where I get locked in. Because I'm like, if we can actually successfully retest this on the 1 day, then we have decisively broken out of the channel. Then I would be very excited, So
I heard an interesting theory, and I'd love to hear your feedback on this. They said there's two scenarios that's playing out. So either we have a soft landing by maybe close to the end of the year, or there's a recession next year. And the longer the energy prices are high, the more likely there's a recession. You could have cryptos or Bitcoin bottom in October, there's a rally, and then the recession hits early next year, and crypto tanks and could get down to 22 levels. What's your thoughts on that?
I mean, my thoughts are going to be on the macroeconomic risk scorecard. So I don't know if you've had time to look at that, Pasha, but I would definitely go to like blockcircle.com/MRS. So it's all here. Mm-hmm. So I would look at what is the combined 6 models into one, which is the M7. The recessionary risk right now is at 27. if I look at, if I scroll up a little bit and I could see, let me look at all the models, right? So I have all the models enabled right now. And where are we at? We are at, because this is updated, quarterly, right? So, but basically we're not really anywhere near like any kind of significant risk, I would say, in like over the next several months. So in terms of that, I'm not too concerned. But there are definitely some macroeconomic risks here that you'd have to be a little careful with. Like real personal income is starting to get a little weak, right? Civilian employment is starting to weaken a little bit. The unemployment is more or less where it was. And then when I look at the financial stress and credit section, this section here that I'm highlighting, look at the corporate yield. And then this is what I don't like. I don't like seeing delinquencies rising. You don't want that.
Yeah.
Right? You don't want commercial real estate delinquencies rising. So that's a little concerning. It's not a massive red flag. It's more just observe and monitor, but be careful. And then yeah.
Yeah. But what's your thoughts with the whole Strait of Hormuz and Iran conflict? Because the last time, like with 2008 financial crisis, we had oil peak topping at, I think it was 148 a barrel. And I don't know, this guy was saying whenever oil gets really high, there's a very high risk of financial crisis or recession following this. And at the moment, they can't really inject liquidity in the market because inflation is growing. So it's either inflation comes down by itself or there's a recession. Because of either way, they can't inject liquidity in the market.
Yeah, I mean, that's why to me, this is where I'm using the momentum trading engine to guide me with CVX. So CVX is, I've been in a long with Chevron. That's CVX. So that's oil. So usually when there's uncertainty, instability, geopolitical risk around oil, around the Strait of Hormuz, around supplies being constrained, anything along those lines, you tend to do really well if you just go long on Chevron. Or tend to go long on anything that is related to like potentially oil prices going up, and then the demand for those particular services going up, then they're going to be the net beneficiaries of that, right? And then I'm going short on SaaS. So like I'm going to continue going short on Salesforce. I'm going to continue I'm not very bullish on a lot of these particular companies that are like enterprise software, So to me, rather than trying to just speculate, oh, well, I think this is what's going to happen, or like I'm just going to rely on like what I have as defined trading strategies that have worked since January of last year, because that tells me everything I need to know, man. I don't really need just focus on, okay, well, this is what's been happening since January of last year. It's traded in this way. It's performed in this way. Then that to me makes the most sense, right?
Yeah.
And then just see if it works, because like this particular strategy has been phenomenal. So, and then there was a lot of uncertainty since January of last year, since President Trump took position, because he was talking about extraordinarily high taxes, surcharges, tariffs, and global restructuring programs. So that all of that is still very much in place. So if there's a strategy that does well during that window, then I don't see why it wouldn't continue doing well.
Basil,
Yeah.
On the liquidity side of things, I mean, you've come a long way, right, from your first trading view models to what you have over here on the latest platform. Can you talk about what type of lag factor we typically see when you see decreases or increases in liquidity, and when we see that in risk assets like NASDAQ, Bitcoin, etc.?
Yeah, I mean, from me, it's this. It's what I'm trying to highlight here is about 12 weeks. So if you look at where we're at now, so the Fed balance sheet is finally expanding slightly. It's still around 6.7 trillion. And then if I look at net liquidity, it's 5.9 trillion. But then if I go down and I want to look at M2, just for US, it's continuing to expand, right? I mean, it's way above the moving average. So it's a 20. So money supply is expanding. US Fed balance sheet is expanding and above the trending average. The money parked at the Fed, which is the reverse repo, which you don't necessarily want this to be draining. You don't necessarily want that, but because you want liquidity entering, not necessarily draining. So this is a little concerning. But to me, like this is actually looking fairly strong, like because I mean, just cumulatively across many countries. And then the only other thing I see that's probably would be a little bit concerning is how extraordinarily hot we are with the market. Like when I go to the terminal view, right? And then I look at let's look at like Nvidia as an example, right? And let's look at like the one day view. So, I mean, look how high we are, man. This is just like, it's getting really hot. It's getting really hot. And it's a little scary. Like you can't, we were at 91. We were at 91 in March of last year, right? So now we're at, that to me is a little scary.
Well, we did have a big run in the stock market, since conflict started. It just kept, it did drop down quite a bit, but it's been grinding higher and higher. And
but that's exactly what concerns me. That's exactly what concerns me. It's just it's too hot, man. It's getting too hot.
And that's where crypto follows slowly, but not hot as stock market. But it's not sustainable. But when the stock market starts coming down, crypto is going to follow as well. Isn't that right?
Yeah, but it's still pretty damn strong. I mean, it's just as strong as it was. But you can see it's waning. Do you see the volume bars at the bottom?
Mm-hmm.
It's very clearly waning, right?
But it doesn't make sense. The stock market would be grinding so high recently. There's always negative news, and the stock market's going up.
It absolutely makes sense. I mean, it's people are just blindly buying and holding and bullish, and they're convinced that the AI boom is going to absolutely take over the world. Where I'm the biggest AI bull, been the biggest AI bull for, I'm not exaggerating when I say 15 years, 16 years. Like I've been talking to people about AI for so long. Have I given up on trying to convince them? Like City, you were asking me about what AI models, machine learning models are being used for the momentum trading engine. Like I've been using, I've been using like random forest, neural networking, neural programming. Nice. Like I've been using clustering, like advanced classification systems. Like I was trying to convince people, like at American Express, for so long about embracing those types of systems, and it was like by the time I left, it was 2017, right? So you're talking about almost 10 years ago. And I was doing that since 2012. 2011, I was introducing predictive modeling and prescriptive modeling. And I was like, this is the way that we should price client structures and client programs and like expense management solutions for them. And I was like, we shouldn't be charging transaction fees. We should charge them specific to them as a profile. And like, it was so hard to get buy-in, right? And now everyone is like, oh, we got to have AI completely replace everything we're doing. So there's definitely some blind, irrational exuberance there, you know? And you see that. I mean, just look at the data, for God's sakes. This is ridiculous.
We did have SMH on there, SMH, and take a look at that. I mean, it's been pretty relentless to
SMH. What is the ETF?
Yeah, just kind of looking at a broader index, and Nvidia's kind of lagged, right? But I guess like the last 7 weeks, it's just been straight up, just a vertical. I mean, you have to kind of go back several years to even find any trend line that makes sense.
But look,
yeah,
I mean, look how massively. The biggest problem I have with and the entire semiconductor space is this. So the money flow index to me is the most reliable singular indicator up there with the multi-time frame momentum scorecard. And the multi-time frame momentum scorecard hit over 200. So let me show you this as I want you to see this. So this is VanEck Semiconductor ETF, right? And usually every single time you see the MMS hit with the 2 standard deviations up, which is marking this upper band. I don't know if you can you see this upper band that's brown?
Yeah, I can see it.
So usually you want to get the hell out when it's hitting it like that. So you have to be very careful.
The earlier part of April, right?
Yes. So it's almost hitting it. We see it usually when you hit it, you see this little X. So this is 2 standard deviations down. It's an extremely attractive time to buy, right? Like that's why I was bullish in March of 2025. I was like, we keep hitting this lower band, right? But then when you're hitting it, when you're not hitting it yet. We're not hitting it yet. But we almost hit it. To me, that's good enough as a hit. Because if I go back, like when did we almost hit it? This was a good time. This is a good time to start considering selling. It was like around 500. I would have been very happy if I was holding this and then sold at 500. It could continue running, but at least like what are you noticing with this? You're seeing that momentum is declining. The strength of the trend is slowly declining. Money flow is continuing to exit, right? And then the Shiken money flow is also beginning to decline. It's starting to turn over here. So this makes me nervous. This is not like I wouldn't be pushing people to be going like all in right now. You know, that makes me that would make me very nervous. You know, and then this is Nvidia, but like let's look at some other stocks. Like let's look at Tesla. What is Tesla doing these days? It's the same, man. It's starting to really like get a little too hot. It's getting way too hot. You know? That makes me nervous.
I've seen reels on social media saying that Elon Musk could be a trillionaire this year.
I don't know. I don't really pay attention to him. Yeah. But look at this. It hit twice already.
Yeah.
When's the last time it hit? September. And it doesn't mean you sell right when it hits. It just means you start getting your shit in place, getting ready. You need to start getting ready, right? Because if you had exited anywhere in this window, you would have done very well.
Breath hasn't been that great though, despite how amazing the indexes look.
Which?
I'm just saying, like breadth indicators, like what you can look at is S is in Sam. If you put the symbol S is in Sammy, 5, F is in Frank, and then I think the last one's I.
Oh, this one.
Yeah, take a look at that. It's a bit noisy, but if you look at the chart maybe on a weekly basis, I think this is good to take a look at when it's at extreme levels. Right, it's probably time to book profits, and if it's really hitting the low band, that's sometimes a good time to be brave and just, buy.
I mean, even look at this. It clearly cannot surpass 58.
It's they've been narrow participation, right? Like the semis, the Mag 7 has been involved, but the smaller mid cap names, not so much.
Mm-hmm. And it hit here. Do you see? So it was getting way too hot in April.
I mean, tariff tantrum time, like if you look back March, April last year, when this metric was like just absolutely looking terrible, like that was a great time, right, to go in.
Absolutely. Absolutely, brother. But yeah, so my thinking is that rather than trying to like guess what's going to happen, we should just continue to leverage everything that we have available. Like we could look at what the whales are doing. We could look at, I mean, they have like exceptionally high win rates, right? So it's like, I want to see what they're doing. I want to see what they're focusing their time and effort on. So we don't need to be trying to predict the next move in the market or the next where the direction is going to be for the next like day or two. All we need is I would use like the whale alpha. I would use the market reversal engine. Market reversal engine has been like exceptional because this tells me, okay, we're massively oversold now as of today at 4 a.m. But more importantly, when you keep getting Bitcoin, Ethereum, Sol, and global stablecoins are oversold, then you know that that's going to be a good time to potentially buy. So what do we have right now? As a scalp trade. And then that doesn't mean you have to trade like 3 times a day. Just maybe you buy in and then you can sell within a day or two. So that's only a few trades a week. But we already got Bitcoin, Solana, and Ethereum all being oversold, but I don't see global stablecoin dominance yet. I see this one only from yesterday though, at 8 in the morning. So to me, that doesn't even count. So I still have not seen global stablecoin dominance hitting oversold. So that's what I would wait for. That's what I would wait for, personally. It just depends on what you're trying to do, but yeah. And then how are we doing on the 1 hour? It's starting to get a little bit of a bounce here. Wow, the 1 hour hit freaking 11. Yeah. If I wasn't busy focusing on building out the platform and getting the trade execution engine, like I'm gonna get back to doing these short trades because I was doing well with them. I was doing really well with them. And I just loved being able to manage it. So now that I have it all here, it's gonna be so easy. It's gonna be so much better. I can just click trade. It'll open up the trading venue for me. I could use Hyperliquid. I can use Alpaca. I can use any platform I want. I can enter, exit, however I wish. Then I have it here. I have all my trades. It's perfect. It's so convenient. Like right now, I could close. The market's closed now, but I could close this trade, and then it'll be closed on Monday morning. But that's what I love about crypto. And soon stocks are going to be 24/7, 365. So we'll be able to buy and sell anytime we want.
I heard about that. When is that going to go live? Is it going to be like big brokers are going to offer that as well?
Yeah, man. It's going to be, they're not going to have a choice, brother. It's just like when Robinhood came and disrupted the entire market by offering commission-free transaction execution for stocks. That disrupted everyone's monetization model. So then all the
I totally agree. I was pleasantly surprised before I left you that voice memo, brother, a few days ago. We're just like, hey, let's just step back. Just the amount of daily traded volume on futures, ES and Q, it kind of blew my mind.
Me too, man. Like your message made me realize that what we have here is inadequate. We need more. We need one. You need 1 or 2 for crypto, 1 or 2 for stocks, a few for commodities, a few for metals, a few for futures, a few for bonds. And then the Asset Outperformer Engine, I think this is still, I still argue that this is, to me, is the most powerful platform, because
I love it.
I just, the entire concept of it is just beautiful. It's just like, in the entire universe of assets, 7,000 plus, which assets are sustainably and consistently outperforming this benchmark? This is a very powerful benchmark. So if you're outperforming the S&P 500 in gold and crypto, and you're doing it on the 1 day, 7 day, and 30 day, then that is a very attractive proposition, like, for me to at least start buying in, especially if it's phase B. Phase B means that it's a confirmed trend, but it doesn't mean that it's finishing. Like, phase C is when you probably would be considered, like, you should be careful, right? But phase B means that there could be some still be some juice there to squeeze, and I just like that there's no memes. Like, when you're asking me about machine learning models, I had to use classification models, right? Classify models to be able to extract out and exclude out memes, and to also determine a conviction score, because the conviction score is very important. So the higher the better, obviously, but it's based upon past performance of other projects that have been identified by the AOE. And I just love that I can go in here and be like, okay, what the hell is dinero, which is money in Spanish, right? It's a suite of products that scale yield for protocols and users, including ETH, liquid staking, decentralized collateral-backed stablecoin, and a public RPC. Okay, a lot of things. But who is it? Okay, 10 million market cap. Volume is tiny, though. Like, that would concern me a little bit. Now, but if I look at the project itself, I'm like, okay, what is it doing? It's not giving me any data. That's also not very good. And then there's not much to go by here. So I'd have to, like, look at it. So I'm like, okay, let me look at the project. If I determine that it's good, this seems like a pretty low, but this is a restaking APR. There's only 6 million total value locked. So that would be, I would want, we'll have more, but the market is so incredibly depressed right now that maybe 6 million is considered okay. And then if I look at their X, oh, it's acquired by Plume. Okay. So Plume is risk and credit ratings will help scale RWA. Okay. So it's RWA oriented. But this volume is too small. But if I want to buy it, I can just click trade now. That's what I love about this. And I can just connect. I can connect all of my crypto venues, right? I have all the venues, like, already integrated. So it's not going to wouldn't be that set up. Like, these are all my test accounts, right? And you see shows me the exact equity, shows me exactly which accounts are connected, which sub accounts. I have my Ethereum wallet, my Solana wallet, MetaMask, Phantom. I have it all integrated now. It's just so convenient, See, this is the challenge I'm having with Schwab, though, is I have to keep reauthenticating. Even though this is just like a tiny account, it keeps asking me to reauthenticate. So I think, Alpaca is very good. Alpaca is excellent. It just continues to, I put $1,000 as a test account, and it's been great, And then I have the safety controls. Safety controls is taken forever to build, but they're worth every minute, because then it allows me to just be very safe with what I'm doing. I'm like, okay, I don't want more than 20 orders a day. I don't want any order to be more than $100. I want maximum 500 per day. Maximum concurrent positions is 5. I can have a circuit breaker. I can say I want to have more risk, so then you have to review and accept that. So it's just nice to have all of this all in one unified area. I don't have to keep jumping around. That's why I'm really happy with everything that's here. It's just so useful having it this way.
Hey, on the reauthentication on the Schwab side, is there a workaround for that?
It's a question for them, right? I don't know why they keep asking to reauthenticate. it's just, and the authentication, it takes like 2 minutes. It's not like a very extensive process. It's just irritating because I have to keep. So when you click it, they send you to their page. You log in, and then you have to review their terms and conditions again. You say yes, continue, yes. They say yes. Do you want beneficiary? Yes, yes, yes. Okay, done. Then go back. Then you wait like a few minutes. It tells you the data is completely synchronized. It pulled the tiny balance that I have in there. See? But I guarantee you, 3 days, it's going to be the same exact. I mean, this is the thing with interactive brokers is considerably worse. So if I go to interactive brokers, you have to run your own server locally. They don't even offer any type of structured interface, like an API that you can plug into without you running your own server on your computer that you have to keep reauthenticating every 24 hours, which is ridiculous. Like you can't even, of course you could run the server on a virtual private server, like as a complete cloud node, and you can have all of that. But like, I don't want to do that.
I mean, which moms and dads are going to do that? And then back to the Schwab thing, right? Who's going to go in if they're a busy corporate professional to reauthenticate? Alpaca, I mean, that seems like a no-brainer. They just go.
Alpaca is for free. It's fast. It's beautiful. It's completely compatible with many countries in the world. It's great. It takes like 2 to 3 days. Like, you know how many people are still waiting for interactive brokers that are in Blockcircle are still waiting for approval? Like it's
that plugin. What was it called again?
Yeah, the capitalizer, the automation one. Right?
I got access, but then I kind of lost interest.
I lost interest because of how exceptionally complicated it was. I was like, why would I want to use that if I can just go to Trade Alpha and I could just deploy, or I go to Momentum Trading Engine and I could just click one-click deploy. I'm like, okay, I want to deploy this strategy. Where do I want to deploy it to? I want to deploy it directly to Alpaca, and then it'll go and buy and sell. And I can scale in with DCA or DCA out across multiple levels. I can distribute over time. I can say I want to buy in 5 tranches or in 5 intervals every hour. And I'm willing to accept a 0.23% slippage. I can do a scheduled entry later in the future. I can execute trades from my account and also from my father's account if needed. I can route the trades on-chain and off-chain if I want to. I mean, there's absolutely nothing like this in the market. You know what I mean? So like, why would I want to go and fumble around using all these third-party trade execution services like the ones we were using when I could just use this? Like, I'm not going to be fumbling around trying to use MaestroBot, TradingView, or Wonder Trading, CornixBot, MizarBot, Coinbase, Kraken, trying to fumble around with Binance, Hyperliquid, right? I have everything here. It's just so easy.
I'm really glad you're doing this. I feel
Me
like
too,
you've
man.
hit this balancing act where you've created this fully integrated type of platform, but you're not taking custody of other people's money. So I feel like it's, hitting that balancing point. So I'm really glad that you kind of stepped into this fully integrated type of platform. I think it'll be great.
Thank you, brother. I mean, that's exactly by design, is that the trading engine and the entire Blockcircle platform is completely non-custodial. And that was the thing that made me nervous, is I'd never, ever wanted to go down the custodial route. And I don't want, I'll show you something really cool. I'm actually really proud of. There was the head of Blockcircle Indonesia. She was trying to connect her Indodax account. And then by design, it worked. It said you cannot connect your Indodax account because you have withdrawals enabled. And I want to show you what that looks like. So basically, she had, it looked like this. See? So this is literally what she would see. Indodax, this API has withdrawal permissions enabled. For security, only trade API. This took me like a whole day to program exactly in this way. This is exactly how I wanted it. I'm like, if somebody accidentally pastes in their API key or their secret key for an exchange that has withdrawals accidentally enabled, you reject it. But I was like, we don't want to bear that responsibility. Like, we do not want any withdrawals, right? It was like, you should be. So this combined with the safety controls has been, I think, really good. You know, it's not perfect. The thing that I really want to...
Can I ask you?
Yeah, tell me. Tell me, brother.
Yeah, I guess with the MTE, it was phenomenal, right, on TradingView. I think you're trying to do it so that it'll be across all assets, and I think you've been 200% thorough with everybody, like manage your own stops, trailing stops, whatever it is. But for the, let's just say the aunties, the uncles, the busy corporate professionals that are like, yeah, I'll give this a try for, Bitcoin or gold or SPY. Can you describe that a little bit more? What is that going to look like?
Well, I think for them, they don't need to have 293% return. I think they would be completely fine with exiting every time it's up 1 or 2%. So what I would love to have with them is just an extremely tightly managed trailing stop loss when in profit. And then only be very selective of which trading strategies we deploy and then we implement here. Like there's no reason for them to be having trading strategies that have below 80% win rate or below 90% win rate. For me, I'm only using 90% above, return being above 100, or above at least have alpha being high. So alpha means you're surpassing buy and hold. Like if you can't surpass buy and hold, then it's not worth your time. But you see the risk is commensurate with the return. Like it's very directly proportional. Like you see that this return is 77. This is an extremely attractive return, and the drawdown's only 4%. Like I could easily sell this to my dad. My dad would not. He would find this one. It would make him very nervous.
Well, it depends on time horizon too, right?
I don't know. Even time horizon. My dad checks everything every day. So if he sees that it's down like 14%, he'll be terrified. Remember I told you when I bought Ethereum, I bought him thousands of ethers at a few dollars, and he was up 4 or 5x, and then it started getting too volatile for him, like where the price would go from 10 to 8, and then he panicked and he said, I'm out of here. He sold everything. And then it exploded from 10 all the way up to 1,500, if you remember. He still like talks about that. I'm like, this is your personality. It's okay. He just can't handle it. It's just too much. It's too much for him. It was literally giving him health palpitations. Like he was getting like losing sleep over it. I'm like, okay. We need to just sell this. This is not working out for your health. I'm being dead serious. Dead serious. So like for the uncles and aunties, I think they're probably not even going to trade BCH, right? They're going to probably only trade Salesforce, Chevron, Shell, BP, like this ETF, this mutual fund. They're not going to want to trade, Ethereum Classic or Sandbox or something outrageous, right? So
agreed.
Okay, guys, what other questions? You have any other questions? Nothing left. Have you seen the Company Valuation Engine yet? I have not promoted it for a reason because I'm still building it. But
Connor was telling me about it.
Yeah, this is the, I had this built into in a way where you can do a digital forensic analysis on publicly traded companies. I mean, there's absolutely nothing like it on the market. And where it allows you to go through their financial statements, like balance sheets, cash flows, ratios, etc. And then it'll identify whether or not there's significant concerns, right? And it tells you whether or not there's any type of forensic concerns around revenue quality, accounting quality, any type of erroneous or misrepresented errors, risks that were disclosed in their 10Ks or 10Qs or 8Ks, etc., or disclosed in their proxy statements that has like a bearing impact on their financial valuation. So that's the company valuation engine is literally built to see which companies are overvalued or undervalued, but using fundamentals and using technicals, and then using sentiment, right? So the sentimental news catalyst view tells you, okay, that it seems like there's a recent stock pullback of X. Okay, but that's it. There's like, what else is considered a negative news catalyst, right? You'd have to keep investigating it. And then at the bottom, it tells you AI disruption potential. Like, how likely is this company going to be disrupted by AI and those transformative forces of AI? And what's the corresponding headwind and tailwind? Yeah. So that's the entire premise of the company valuation engine. So I think it has huge potential. It's just very complicated. So, and my models keep saying that the majority of the stocks are massively overvalued. And I mean, that's true. If you look at the numbers, it's true. So, but yeah, you guys can check them out and then you can analyze, you keep reanalyzing them if you want. Because this is all cached because I already ran them. But you can analyze them yourself and then get like current data if you need to, you know.
Okay, all saying overvalued means the market's very hot.
I mean, yep. I mean, if it's overvalued, I mean, this particular stock is massively overpriced according to fundamentals and technicals. That's what it means.
That's pretty incredible having all that there.
Thanks, brother.
That's amazing. That would have taken a long time.
It's taking forever, man.
Pull that together.
It's taking forever. It's taking forever.
Yeah,
it's taking like every ounce of like brain power I have, and every code, every script, everything it's all centralized here. So I used to have all of these in Python, so now I have them all here.
It looks amazing, incredible, and I don't know if this is like overfitting potential trading, investing diligence, but have you given some thought to crossing the valuation or the fundamental side with the technical side? You think any users might want to, have both win at their backs?
I mean, that's what they're showing already. So like you'll see when you have time to go through one, like from beginning to end, you'll see that it's including. You'll see that this is the fair value, and it tells you exactly what type of valuation models are using. So the discounted cash flow intrinsic model is using the capital market pricing model that's using the weighted average cost of capital, right? So this is like your normal discounted cash flow intrinsic valuation model, but then I'm also using a Graham one. I'm using a Peter Lynch valuation model, right? So I'm using like 7 different valuation models. Some are technical based, some are not. So it's already doing that, You just need time to, yeah.
Yeah, no, that makes a lot of sense. What I was saying is your AOE, right?
Mm-hmm.
And then your valuation module. I'm just wondering if you were to make a Venn diagram, right? And you're trying to hunt for the things that are like undervalued based on your valuation model, and then top scores from AOE. Is there anything in the middle of the Venn diagram that would say, aha, I have things that are both, great opportunities on the AOE and also on Blockcircle's valuation module?
Oh, I would love that. I've never thought of that. Because right now, see, we have some, so I have this. So every company has its own dedicated page, right? So if you click the company, it takes you to a dedicated page for Berkshire Hathaway as an example. And then I added the AOE section to it. But what you are saying is just take everything you have here just one tiny step further, which is like another view almost, or go to the AOE and overlap the company valuation scores and maybe have that as a filter. Because then that would be, because that's literally what you're asking for is another little section here in the filters that says only show me companies that are significantly undervalued based upon 4 of the 7 valuation models that you're using and are sustainably outperforming our benchmark across those 2 of the 3 main time periods. That's what you're asking for. That's very good. I like that. I love that.
And I think for your next, wave of, valued Blockcircle members that might come in, depending on what their industry or field or profession is, I know of people who invest like that. So I think that could be really game changing for them. Huge time save.
Yes, exactly. I'm just writing it all down now. So adding Company Valuation Engine to the filters in the EOE and allowing the user to set minimum over under valuation scores relative to the number of valuation models. The other thing I need to do, you're making me realize, is that we really need to have a composite average. You can't just have 7 valuation models. We need to have, we do have a composite score, but then we really actually need, you actually need one composite valuation average across these 7 valuation models. That's what you need more than anything. Because right now, because the numbers are vastly different, you see? And this kind of cash flow is not very reliable on its own. So I would want to get
No, I think that makes a lot of sense just to reduce, decision overload. Now, would you weight them equally?
Now, welcome to my life, man. Now you're entering Vassal's world.
Yeah. I was looking at your MMS the other day, right? Like, digging into your trading view write-ups, and there's some decision making coming up with the composite scores.
Yeah, it's so difficult because then it's not as simple as just doing an average and have an equal weighting for all of them. I have to back test these and see how accurate they've been in the past in terms of identifying over or under valuations, and then pairing that score with each valuation model and then assigning a weight to them and then doing an average of that. So there's a lot involved. But
and that's where I'm sure with your roadmap, just thinking through like what you want to gate your, next release on, right? Or that this is something that's coming soon.
Yeah, exactly. That's exactly it, brother. That's exactly it. Okay, guys. Well, I need to go. My wife needs me. But if there are any other questions, though, please just ask. Just post them and then tag me, okay?
Yeah, barely been looking into stuff. You got so much on here.
There's so much, man. That's why. Why do you think I've been pushing? I've been pushing you guys. I've been pushing everybody. Like, get in there, use it, because it's all here. Here's the Pasha. This is what you were asking about. So this is the forecast. You see these dots?
Yeah.
So these are the forecasts, 6-month forecast, Pasha.
Okay.
So if you just disable, honestly, man, I think M7 is enough. Just use the white one. So you see how there's an increased risk of recession here?
Yeah.
So it went from 26 to 39. It's going up to 39 to the end of June.
Yeah, I've heard the oil reserves are going to be low, going to get low in July in the US.
Yes.
And that could impact the energy prices.
Exactly. And then in terms of policy, just click the policy tab. See this here? Just click the policy tab, scroll down, and then you'll start seeing any type of divergence between markets.
Yeah. Okay.
Why is the Bank of England cutting? Like these are the things that are interesting. All right, guys.
One thing to keep a close eye on is like with rates going up. I mean, at some point, these central banks, countries, etc., they're going to have to print, just to keep up with all the debt load. So
exactly, they won't have any.
I know you got to go.
Yeah, but they won't have any other. You're welcome. They won't have any choice. Exactly. That's exactly my thinking too. Okay, cool. All right, guys. Thank you so much. Take care. Bye-bye.
Bye.